Very good morning, friends. So I hope you're all safe and healthy. Well, we've been continuing with the series of Index 113 that deals with fair value measurements. And we made a couple of backgrounds regarding the concept of fair value, though I know we have yet to touch upon the definition of a fair value. But another aspect related to the fair value concept is, earlier we've been speaking in terms of that fair value is a market-based assessment and not entity-specific. Well, today I'm going to make another statement and we're going to work upon that statement. Index 113 makes it very clear that fair value is supposed to be an exit price and not an entry price. Now, immediately the question what comes to the mind is, what do you mean by that it is an exit price and not an entity price? Let's find this out in detail in this video.
पेपर इलेक्टिव्स के हो या पेपर मेन हो, तैयारी तो सभी की करनी चाहिए अच्छे से, बिल्कुल सही बात है। तो आपके लिए आ रहे हैं इलेक्टिव पेपर्स के अंदर बैचेस, और इलेक्टिव पेपर के अंदर GFRS ग्लोबल फाइनेंशियल रिपोर्टिंग स्टैंडर्ड, जो कि CFINL ग्रुप 1 के फाइनेंशियल रिपोर्टिंग पेपर पर बेस्ड है। आप जानते हैं कि जो बच्चे GFRS की तैयारी कर रहे हैं ग्रुप 2 के अंदर, उसके अंदर इंस्टीट्यूट ने रिसेंटली एक केस स्टडी डाइजेस्ट इशू की है, और इस केस स्टडी डाइजेस्ट के अंदर लगभग 30 केस स्टडीज हैं, जिनमें कुछ बहुत अच्छी केस स्टडीज भी हैं और कुछ पास्ट एग्जामिनेशन पेपर्स हैं। हमको फाइनेंशियल रिपोर्टिंग से अगर अपने GFRS की तैयारी करनी है एक बड़े ही स्ट्रक्चर्ड मैनर पर, तो इसके लिए आ रहा है एक कंप्लीट एक्सक्लूसिव बैच जो इलेक्टिव पेपर्स में GFRS को डील करेगा। तो मैं आपके साथ आ रहा हूँ 16 जून से, और ये बैच रहेगा मंडे टू फ्राइडे, और इसके टाइमिंग्स रहेंगे 10:30 से 12। इसका मतलब मंडे से फ्राइडे आप इस बैच को अटेंड कर सकते हैं। लगभग ये बैच आपका चलेगा अराउंड 75-80 आवर्स के आसपास, जिसके अंदर हम सारी केस स्टडीज कार्व आउट बेसिकली आपके GFRS के पेपर की अच्छी तैयारी करने वाले हैं। तो किस बात का इंतज़ार है? डिस्क्रिप्शन बॉक्स में आपको इस बैच के लिंक मिलेंगे, तो आइए लेट्स क्रैक इट।
Well, first of all, I think let's get on to the definition of what is an entry and exit price, which is given in the Appendix A of Index 113. You know what I've done? I've actually picked up the definition and tried to highlight certain words which I think would be a focus of attention. If you look at the definition of the exit price or the definition of the entry price given in Index 113, they've given a separate definition for an asset as well as a liability. Now, when you look at a fair value measurement, the fair value measurement focuses on an asset as well as a liability. So let's consider the asset separately and let's consider the liability separately. Now, when we look at the concept of exit price for the asset, it says the price that would be received to sell an asset. Now, the focus is in terms of the sale. So I would say the fair value represents an inflow, when you go to sell an asset. And on the contrary, if you look at the concept of an entry price, before I take you to the concept of an entry price in terms of, liability, let's, I think, first of all, also focus on the entry price for an asset. The Appendix A defines that for an asset, an entry price is the price which is paid to acquire an asset. So you can notice one very important aspect in terms of the entry and the exit price. When you look at the entry price, it is supposed to be, I'm focusing on an asset, it is supposed to be what is the outflow. So when you're going to, acquire an asset, so what is the outflow? That is what is called an entry price. Well, I would call it simply as a historical cost approach. If I were to give nomenclatures in terms of an entry price, I would say it is something like, what we call in the index as a transaction price. Now, whether you call it as an entry price or what you call it as a transaction price, or what you call a cost of acquisition for an asset, what you call historical cost under IGAP, that is what an entry price is. Under the IGAPs, we've been always recording an entry. Like, for example, if you purchase a property, plant, equipment, let's say you pay 10 lakh rupees to acquire an asset, you would put the entry property, plant, equipment to bank, and that's going to be with 10 lakhs, which is the entry price. But in this particular case, well, this is just an example, but when you're looking at the concept of a fair value under Ind AS, the concept of entry price, that is a transaction price, would not apply, and we would start thinking in terms of an exit price, that if I were to actually sell an if I want to sell an asset. So in this particular case, what is the amount you're going to receive? And the computation of the fair value would ensure that we try to maximize the amount that would be received on the sale of the asset. Similarly, if you look at this particular concept in terms of liability, it gets a little more interesting compared to asset, because in terms of asset, you're only looking at entry means what do you pay, and exit means what do you receive. But when you look at the concept of a liability in terms of exit price, it very clearly says the price which is paid to transfer a liability. Now let me focus, there can be a payment on a settlement, and there can be a payment in terms of a transfer. Now you would immediately say, what do you mean by that? There is a payment in terms of a transfer, or there is a payment on a settlement. Now first we need to keep this in mind. Don't worry, I'm going to come to an example where I'm going to illustrate the concept of what is a payment on a transfer, or what is a payment on a settlement. But when you say it is a fair value of a liability, is what you pay to transfer and not to settle. On the contrary, if you look at the concept of an entry price related to the liability, it says the price that is received to assume a liability. Let's say, for example, if I were to issue debentures and I raise a total of 10 lakh rupees, then the entry which I do under my IGAP is bank account debit to debenture, and that's going to be 10 lakh rupees, the amount I received to assume a liability, and that is what we call a transaction price. But the fair value is not supposed to be the amount which you're going to receive. So in terms of liability, the focus is, when you look at entry price, what do you receive? But when you look at the fair value, it is what are you going to pay to transfer and not settle. But I think now we need a little more inputs in terms of the concept of what is the payment on a settlement, or what is a payment in terms of a transfer. So let's, I think, take an example to understand this, though this is going to be a little typical example where you will need some knowledge in terms of, financial instruments as well, because this example actually relates to certain terms which are used in 109 and a few terms which are used in the advanced level of Ind AS 113. So let's, I think, take you to that particular example. Now, in this particular example, what we're going to do, we're going to make a distinction in terms of what do you pay on a settlement and what do you pay in terms of transfer. Imagine that a bank has given let's say a loan to a counterparty, let's say X. So in this particular case, this loan is supposed to be an asset for the bank, but it is supposed to be a debt obligation for the counterparty X. So let's say the bank has advanced, let's say a loan of 1 lakh rupees, which has got a face value of 1 lakh rupees, but it has got a market value of 95,000. Now you would say, what do you mean by market value, sir? Is that the fair value? Yes, it is the fair value. Now you would say, how do you say that the market value and the fair value is same? No worries, we'll come to that. Now a little input in terms of Ind AS 109. If I were to calculate a fair value of this particular loan, what I would do, I would first of all visualize that what is the, promised obligations on the part of the counterparty. And those promised obligations, that is the contractual obligations, will be discounted using a market rate of interest. Now, another assumption what we are taking in this example is that the market rate of interest and the contracted rate of interest is same. Now, in a typical situation, let's say, if I'm going to pay, let's say 1 lakh rupees plus a 10% interest at the end of first year, so I'm going to pay 1,10,000. So if you discount this at 10%, which means that first of all, you added, or you can say compounded, a 10% interest, and you got 1,10,000. Now, if you're going to take the present value of that 1,10,000 at 10% itself, the compounding and the discounting rate is same. So what would happen? You would also get the present value to be 1 lakh rupees itself. So in this particular case, for a time being, let's forget about that we given a market value. So in this particular case, what I'm technically saying is that the present value of the future outflows and the money which you receive to assume a liability, the money which you receive to assume the liability 1 lakh is what we call the entry price or the transaction price. And the present value of what you're going to pay, that means what you're going to pay to settle, is 1 lakh rupee. So the bank says that I want my money. So after 1 year, so I'm going to pay them, let's say 1 lakh rupees plus a 10% interest. So if I calculate the present value of what I'm going to pay to settle is going to be 1 lakh itself. So in this example, the amount which you're going to pay is supposed to be 1 lakh itself. So the amount paid to settle, mind the words, the amount paid to settle is going to be 1 lakh itself. So in this particular case, if you look at the settlement value, if the bank says that I want my money, so you would say, okay, after the end of first year, I'm going to pay you 1 lakh rupees plus a 10% interest. So if you compound at 10% and you discount at 10%, you get the same amount. So incidentally, in the given example, the settlement value and you can say the transfer price is same, but the settlement value is what you're going to pay to settle, but that's not the fair value. Because we said the fair value is what you're going to pay to transfer and not what you're going to pay to settle. Now, this is one aspect. Another very interesting aspect is that Ind AS 113 in terms of para number 42 tells me that, when you measure a fair value of a liability, you should also consider what we call a non-performance risk. Now, when you say a non-performance risk means that there is a risk in terms of a non-payment to your supplier. So this also needs to be taken into account in the measurement of the fair value, that I am, having a risk in terms of not making a payment to someone. Naturally, if you imagine that there is a loan where there is no risk of payment, and if you imagine a loan where there is risk of payment, naturally the interest charged is going to be greater when there is a risk of payment. So when you're going to use a discounting rate to calculate the present value of such a loan where there is a risk of non-performance, then what would happen? The value will be below 1 lakh rupees. So that's what it says. When it says that the market value is 95,000, now there is a 5,000 discount due to the market concerns about the risk of non-performance. So now in this particular case, we've got three values. One is the amount which you received to assume a liability, that's 1 lakh. One is the amount which you go to pay to the bankers, that is the settlement value. And there is another value which was, 95,000 incorporating the non-performance risk. Now I think let's take it further. Now look at the difference now in settlement value and the transfer value. Now in terms of the settlement value, the counterparty X would be required to pay the entire face value to the bankers. The bankers may say, boss, you may have a risk of non-performance. I don't care. You give me the entire money. So which means I need to pay the bank the entire money of 1 lakh rupees. They're not going to give me any kind of discount. And they're not going to say that, okay, you pay less than 1 lakh rupees. We gave you 1 lakh, you give us 1 lakh rupees back and settle your liability. But now let's look at the transfer value. When you look at a transfer value, in a settlement value, you're looking at a transaction between the bank and the counterparty X. Mind it. But when you're looking at a transfer value, you need to think about a hypothetical transaction where you're going to consider another counterparties, let's say X and Y. So the bank, it's not the X is not dealing with the bank. It is basically X dealing with the counterparty Y. Now let's say there are two counterparties X and Y. They've got similar kind of credit risk profile. Y is also needing money. So what the counterparty Y does, he has got two options in life. One is he goes to the bank and approaches for a fresh loan. The bank would give him the loan at a higher rate of interest, considering that he's also got the same credit risk in terms of, just like X. So the bank may not be willing to give him the same rate of interest. Or the other option is that, Y transacts with X and tells him that you've got a certain liability, why don't you transfer that liability to me? So in this particular case, if the counterparty X were to transfer the liability to Y, then in that case, the market value, that is the amount which will be paid to transfer the liability, is going to be 95,000, which would incorporate the non-performance risk as well. Now you would be thinking, so does that mean that in a situation, if there would have been no non-performance risk, then perhaps the settlement and the transfer value would have been same? Yes. So there are situations where an entry and exit prices can be same. There are situations when the exit price in terms of what you pay to settle and what you pay to transfer is also going to be same. So this is a very interesting aspect in terms of fair value measurements. Something more coming up in terms of the fair value measurement aspects with you, because now what we're going to do in the next video, we're going to actually touch upon the definition of fair value, and trust me, we've already made a good background on the concept. Thank you, take care, and goodbye.